We all think this is the best buying opportunity we've seen since the global financial crisis. And in some parts of the market, the most hard-hit sectors, it might even be better. And this has it's all to do with cyclical stocks. The cyclical stocks are the ones that have underperformed the most overall. And they're the ones with the greatest amount of upside, not dissimilar to what we saw from February of 2009 through 2012, February 2012. In those 3 years, cyclical stocks outperformed defensives by 5 percentage points a year. We think they're going to do even more in anticipation of the next recovery.
I think the problem, Sarah, is that we just don't know when that's going to be and how deep the pain is going to be. I mean, I've heard people use the D word for depression, not to be too doomy and gloomy, but we've never seen anything like this, have we, in terms of just an economic sudden stop for the U.S. and much of the developed world, happening in Europe as well. So how do you know that you want to be buying cyclical stocks right now? It seems pretty risky given the outlook.
Well, Sarah, you're right. You don't know. If we did know, the stocks wouldn't be nearly as inexpensive. But the question is, how much risk are you taking in some of the world's best companies? Like here, our General Electric, good old GE, the stock price is below $7. Larry Culp runs that business. He's a phenomenal operator. That company is not going away, and they are, part of them, very geared to aerospace. Aerospace will come back. It's inevitable. It's just a question of when. So why not accumulate shares in these great companies now? Siemens would be their European cousin, another fantastic business that's halved over the last year to date. The stock has fallen 50%. That's half off on a business that wasn't overpriced to begin with. And you get that incredible healthcare business with diagnostics and imaging. This, to me, is as good as it gets. If you can't buy now, that means when it is obvious that the cases have peaked and markets bottom, something that we put on our Causeway website. This is what happened in China. Peak cases, market bottoms, and then the Shanghai index turned up again. That will happen here as well. It'll happen in Europe. But you have to buy the stocks beforehand, even if it seems scary. They are, in fact, lower risk now than they were at the beginning of the year because they have fallen so much.
Sarah, just quickly, you mentioned Europe. I note on your list of stocks you like one airline there and one automaker, continuing the theme of your bold calls that you've just been mentioning. Which are those two?
Well, the airline is bold. It's Air France KLM. Both the France and the Netherlands own a big stake in that company. It employs 83,000 people. We're convinced neither country want to see their flag carriers fail. And this is an exogenous shock. And the company will be, it will have its taxes postponed, landing fees. The governments will do whatever they can. They'll help pay the labor costs to get this company through the next couple of quarters. Aviation is coming back, and even though it has been hit the hardest, it will have the greatest rebound. That's why it's so interesting. You'll not just get a double. We think these stocks can triple, if not more, and they're not going out of business. And as for automotive, Volkswagen, this is a company that knows how to deal with crisis. Remember Dieselgate in 2015? Well, look at this stock. Volkswagen makes over half their cash flow in China. They've already dealt with COVID-19. They have over 21 billion euros of net cash on their automotive balance sheet. So they have the financial strength to weather this. And they're at the forefront of electric vehicles. This is as good as it gets.